Morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. 654th video, baby. Yeah. 654 technical analysis videos posted on YouTube, free for you to peruse, free for you to learn from. And there's a lot of information in those videos that will help you be a better analyst. Traders, if you are trading the futures markets or stocks, if you are trading either of the two, the work that I show you in these videos can absolutely help you, because it certainly does apply to just about any market that moves around, stocks, commodities, or ETFs. Traders, today, this video is a slightly longer term view, although it is being filmed on Thursday night for you to view on Friday. That would be November 12th, 2010. This view is a slightly longer term view. It is what we think will be happening over the near term. Traders, before we go any further, remember that futures trading is risky. It can cause substantial financial loss and blah, 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 blah. Let's get right to this. Traders, what I want to say is this. I have had a lot of people writing in the last few weeks, and I got to say, we need to do something, traders. You know, we need to have a little lesson here. We have to have a talk. This lesson is simply how to tell a bull market from a bear market using our eyes only. Simply our eyes. That's all we're going to use in this video to decipher bull market, bear market. How do you do that? Traders, step over here with me if you will. Let's pretend for a moment that this is your computer monitor, split screen and everything. You got a great system. Traders, what you got to recognize is this. When a market starts on the bottom left of your screen and travels up and goes all the way to the top right, that, my friends, is a bull market. I don't care what you think about the Fed. I don't care what you think about Greece. I don't care what you think about anything else that's going on in the world today. You cannot write me emails and write things on my YouTube video that tell me we're not in a bull market, traders. We may have pullbacks. Yes, we may be in a pullback phase right now. We'll get to that in the chart segment, but that is a healthy part of a bull market. Backfilling is healthy in a bull market. You go up, you backfill, you go higher. But the purpose of this video is simply using our eyes now, right? How do you tell a bull from a bear? The bull starts here and it ends up there. No matter what you think in your mind, if that's what your chart, your computer screen looks like this, say to yourself, ooh, bull market, and stop listening to the inner voice. All right. How do you tell a bear market? This one's tricky. You got to watch out for this one, because even I can't see them sometimes. Bear markets, it's nothing like the bull. The bull's easy, right? It starts here and goes there. But when you look at a bear, it gets so confusing because it starts here and it goes down to there. And I know that gets confusing because you look at that and go, what is that? I can't tell. It looks just like this to me. That's what you guys seem to be telling me, that this looks like that, and you are wrong. So do me a favor, do yourselves a favor, and just learn to decipher the difference. I'm going to stand right here and just give you a moment to just take this one in, just absorb this. Bull market, bear market, bull. From here to here, guaranteed someone will call that a bull market if they have eyes. Here, bear market, starts up here, ends up down here. That is a bear market, my friends, and we are not in a bear market in world indices. Again, granted, we may be in for a pullback here. This may be where we come down a little bit, but we just got above our yearly highs that were set in May for all of 2010. We just got above those highs, so a setback now makes perfect sense. Traders, with no further ado, I don't want to waste any time here. I want to go right to a chart segment, and I want to show you what a bull market looks like, and I want to show you why backfilling is something that's expected, and that repetitive patterns are the cornerstone to technical analysis, traders. There is no voodoo here. What we do is we look for a pattern. We look for another pattern that looks just like it. We check a bunch of technical indicators when we see that pattern, and we say, yes, this looks like that. The same thing should happen. That is 95% of technical analysis. That is what I look for in my charts. That is what we see over and over again, and that is why you can tell a bull market from a bear. Traders, with no further ado, let's go look at some charts. Okay, traders, the first chart you are looking at in this series of charts is the Dow Jones Transportation Average. And right off the bat, for you traders who in the audience who are paying attention, is this a bull or a bear?
Bull!
Why?
Because it starts at the bottom left and goes all the way to the top right.
Yes, very good. Wait, we got another one. Good answer, guys. Yeah, we got another one for you. Are you ready? Come on, look at this one. What is it?
Bull!
Why?
Because it starts at the bottom left and goes to the top right.
Yes, and it's the German DAX, and it's bullish just like the Dow was that I showed you. That's the Dow Jones Transportation Average. Here comes another. What is it? Is it a bull or a bear?
Bull!
How come?
It starts at the bottom left and goes to the top right.
Very good. You guys were paying attention. A round of applause. All right, now, traders, this is the FTSE, and now here's where it gets more interesting. Yes, we've established with our eyes now that this is in a bull market. But here's where it gets interesting. Look what the FTSE does when it gets above its yearly highs for 2010 set in May, earlier this year. It gets above, it stages for a little while, and then it explodes. That's what the FTSE did when it got above its yearly high set back in May for 2010. Next chart, please. Remember the staging area. What is it?
Bull.
How come?
Starts at the bottom left and goes to the top right.
Very good. Another round of applause. This is easy now. All right, this is the NASDAQ. You've seen the FTSE, right? The FTSE gets above its highs that was set in May for the year, has a little staging area, and then explodes. Well, what does the NASDAQ do? Gets above its highs for the year, has a little staging area right there, and then explodes. Here's what else is very interesting. These are all line charts, not bar charts, traders. This line chart for the NASDAQ, when it goes up and it has this wiggle, it's a bull flag. Look what happens. Boom, it goes up, has a wiggle, bull flag. Look what happens. Boom, it goes up. It's having a wiggle right now. That means it should be a bull flag, right? That develops right here. So that's what we're hoping to see in the NASDAQ as we have this little wiggle. Next chart, please. We're going around the world, baby. That leaves us with an ES chart. In the ES, what would you consider this?
Bull.
How come?
Starts at the bottom left and goes to the top right.
Very good. Now look what the ES is doing. You've just seen that the FTSE reached an area where it gets above, it stages for a while, and starts to run. You've seen the NASDAQ do the same thing. Well, the S&P is now above its previous yearly high set in 2010, and it's having a little staging area. Now, look, it can go down a little and up a little, and it can hang around here, but eventually it should run higher. Now, parallel channels, traders, they're very powerful. They work really well when you behave and stay inside of a parallel channel. Then you should be able to buy the dips in a bull market whenever it gets down there. This is the ES. I'm going to show you another chart now. Again, I've been showing you bullish-looking charts around the world. We've seen FTSE. I think I've already shown you the DAX. We've seen the NASDAQ. We've seen the Dow Jones Transportation Average. We are looking at now the S&P Brazil ADR Index, the Brazil Index. Traders, interesting thing with parallel channels. When in a bull market, and we know it's a bull because it
starts in the bottom left and goes all the way to the top right.
Very good. We've established we know how to tell a bull from a bear. So here we are, the S&P Brazil ADR Index, and why channels work so well. When it hits this channel, what did it do? It went up. When it hit this channel, what did it do? It went up. When it hit the bottom of this channel again, what did it do?
It went up.
Now we're at the bottom of the channel right now in the S&P Brazil Index. What do you think it should do?
It should go up.
It should go up, right? Now watch this next chart. Remember, and every time it hit the top, it went down. Here we are, that same S&P chart. I've blown it up a little bigger for you, and we are in a channel. When it came close to the channel here, what did it do?
It Went up.
When it came close to the channel here, what did it do?
Went up.
When it came close to the channel here, what did it do?
Went up.
When it hit the channel here, what did it do?
Went up.
And we're at the channel right now during this video tonight, Thursday night. What do you think it should do?
Go up.
It should go up. Now, granted, traders, if it comes down a little, it's okay to have a little staging area here while it's testing those previous highs that was set back in May. That is okay. But while inside of this channel, it should hold the channel and move up. If we come out of the channel, we'll deal with that when it happens. But traders, this is a bull market. This is a parallel channel. And when in a parallel channel, we are compelled to buy the dips when in a bull market inside of a parallel channel until it breaks below that channel. While in it, you are compelled to buy the dips. If you are someone that recognizes that history repeats itself, that is the whole core of technical analysis. There it is, traders. Yes, we could come off in the S&P a little bit, but the proof that once you get above May's highs or 2010's highs set in May, you should have a staging area and then more of a rally. Traders, I hope this helps. I hope for you perma bears out there, you recognize that even if we come off for the next couple of days, we are set in a bullish trend and we will very likely continue in that pattern. So, traders, you've seen those charts, and now I think you all know how to tell a bull market from a bear market. Traders, now that you've watched this program and you've taken this little class with me, it's time for a test. Audience participation. Are we ready?
Yes.
Yes, okay. It's going to be confusing because I changed them up. I made it really confusing. I didn't use red or green, so you're going to have to use your eyes to get this one right. Are you guys ready?
Yeah.
All right. What is it?
Bear market.
Why?
Starts at the top left and goes to the bottom right.
Yes, very good. One more question, guys. You got 50% so far. What kind of a market is it?
Bull market.
Why?
Starts at the bottom left and goes to the top right.
Very good. I think we got this down now. Traders, listen. Yes, we can have some pullbacks, and you've seen the staging area. You get above the highs in almost every other index around the world. You get above May's highs that was set in May of 2010. You get above it. You have a pullback. You mess around there for a while, and then you go higher. So a pullback is healthy. A pullback's expected. Don't take your eye off the ball. The larger picture is that we are in a bull market. Traders, I hope this video helps. I hope this helps you see the larger picture. Again, if we come off on Friday, no need to send me all the nasty emails that I was so wrong because, again, this is a slightly longer-term view video. Even though I like buying the dips on Friday anyway, this is geared for once that pullback is done with it, whatever it wants to do, and it coils up, for the next rally higher we go. Traders, keep your eye on the ball, keep your eye on the larger picture. And come on down and join me in my trading room. I'm there live to help you get through these markets. You come on down to www.livewithoscar.com and jump into our chat trading rooms and hang out with us and allow me to teach you to be a better analyst, which I know for sure as time passes will make you a much, much better trader. Traders, thank you so much for watching these videos. I really appreciate it. Thank you so much for your viewer mail. Thank you for your patronage. And you traders that filled out those applications for OmniCamp, boy, oh boy, you touched me in my heart. They love me, guys. They love me. You guys sent me so many applications. And so many of you want to come out and spend days. Guys, you touched me right in my heart. Thank you so much. I appreciate it. I will run more of these camps. I will teach you everything I possibly can when you come hang out with me in Vegas. All right, traders, thank you so much for everything else that we do together. And don't forget to come on down to my site and keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah. Thank you, guys. Thank you, thank you, thank you. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.